Okay, good morning. Today's stock we're going to be talking about is AppLovin. We're going to look at the SmartScore, which is the business quality. We're going to look at the dashboard, which is what's going on. It's going up, down, and then we're going to look at like the if it's going up or down, the revenue and everything like that. We're going to look at the valuation, and then we're going to look at should you buy it or not, and then we're going to compare it with other stocks. Maybe you should be looking at other stocks instead of App. And then we're gonna look at the technicals. Okay, so let's start with our smart score, business quality. So I got 8 out of 10. I usually like to see it 7 out of 10 for me to consider buying or not. So this is it's good quality, as you can see. Market position, it's a large cap stock, as you can see. Financial health, it's pretty good. So they have 11 cents to pay for every dollar, and they definitely have they can pay all their bills and still have like $3 on a dollar left over. Profitability, it is profitable. It is has high growth, as you can see. ROE is 20%. 15% is good. This is definitely strong, as you can see here. It's strong. Anything above 20% is strong. Capex, zero capex spending. I believe they're spending money on it because it's not spending money on AI. They're spending money on it. So like Microsoft, Google, Meta, all of them. Growth, high projections, strong, very strong. EPS 41, very strong, very strong, very strong. That's why I got 9 out of 10. Valuation, pegs below 1, which is good. Below 0.5 is strong. PE ratios, it's you want to see the forward PE Buffett style below 20, which is good. PE ratio right now is a little bit high, but for a growth stock we accept it. So let's move on. It should be 20, but it is around 20, so I'll accept this. High return on capital, as you can see. Revenue quality, premium growth margin consistent on 5 years, so it's amazing growth. Like I said, it's a strong buy by Analyst. Track record, has bad track record, obviously, because it's a new company. It's not doesn't have 10-year-old history. It's not a momentum. This is from technical side. It's not really moving up and down. It actually crashed. Now let's look at what's going on from our dashboards. Let's go here. So as you can see, it's going down, up, down, up, down. Now it's down. As you can see, free cash flow almost $1 billion. So did it beat? Yeah, June. It definitely beat last June, which is great. As you can see, it's going up and down, but overall it's going up as cash flow keeps beating it. EPS, what you want to see, you want to go see it going up, which is great. It is going up. It's skyrocketing actually. As you can see, the high growth stock. The average for this company, it's 49 PE ratio, so it's below its average. So as you can see, usually for large cap stocks, you want to see it below between these numbers, 15 to 18 for a large cap. But for this case, it's a strong company. You want to see it 20 to 24. So as you can see here, which is fair, which is good. As you can see previously, it's super high because it's a high growth stock, so the PE ratios were super high. And then we're gonna look at hit. We got it. I think this year it's only 0.1. That's why it didn't. They were expecting a higher number, way higher number. That's why the stock fell. But for us, this is where we're looking to buy the stock. So let's move on. Revenue growing, great, check mark, green flag, free cash flow growing. This year is not really over, but it looks like this year won't be as good as maybe last year because of it missed. Won't know till then by 2020. I mean by December. Capex, zero capex operation, great shares outstanding. It's flat, which is really good. Usually expect companies like this as a new company to be actually issuing more shares, so it's okay. Maybe you can see it issuing more shares in the future, but it's okay. It's neutral here. So let's move on to our should I buy, should I not? As you can see, like we said, it's below 28 or 24. It's supposed to be an 18-20 for a large cap up, but for the stock we'll accept it. The highest was around $750. The lowest it was around $300. So it's 524. Below that price, good. Peg is below 1, good. Analyst target is 520. I believe not this number is not correct, but it is. So it's below that, it's check mark. Here we have companies growing up, definitely check mark. So let's go to our should I buy, should I not tab. Let's look at the estimates, our earning valuation method tool, our analyzer tool. So as you can see here, we're expecting a high growth, almost 35%. So we're going to use these numbers, and revenue is obviously going above 20%. So which is a really, that's why the PE ratio is so high. So let's go, should I buy it, should I not? Look, according to Ansible, they're expecting 38 to 40, but we're going to be conservative. We're only going to run on APS growth at 30%, which is still it's a little high, but for a growth company, it's fine. PE ratio, we're going to keep it low. So as you can see, you get a return of 400%. If you do 20 PE ratio, you just know the cost, this is low. For this company, you can see 120% growth. If you give it a low PE ratio, you can see even 18, we can even go lower, 18 PE ratio. This is super conservative. Either way, it's a buy, it's a strong buy, as you can see here. We can play, you can also play with this. This tool's still not out yet, but it's only for me to use. In the future, I'll be available for everybody to use. And then we're gonna look at our PE ratio method, when you should enter the price, and when you should be selling. As of right now, since it's a large cap stock, this is the PE ratios for large cap stocks. So this is the price that you should be buying if you believe that it's a low large cap stock. But I don't believe that, because it has a high growth stock. By 2030 or 2029, you should expect this company maybe to be near the mega cap stocks. So we're gonna use middle. So these are should be your entry point prices: 312, 286, 260. So what I recommend is buying it 3 times at 312, 286, and 260. Your selling point should be here at the high PE ratios. 32 PE ratio for the mega caps, that's the high PE ratios. I mean large cap stock. So if it hits between this number and this number, you can go ahead and sell the stock to get back your return. And then we're gonna move on to our comparing tab. We're gonna compare it to other stocks. Maybe you should be looking at other stocks other than App. So let's go. So App already has 5 check marks. 2, it was 1. So let's go ahead. 24.0. This is incorrect. There's an issue here. The EPS, obviously, because of that has negative EPS. See, that's why. So it definitely fails this one even. I wouldn't even, this is an X right here. So I'd give it 5 actually. Forward PE, yeah, these are good. This forward PE is really good. Here it failed. You don't want to be actually looking at stock at all. Let's just compare these two only. App, visit apps. EPS, it's growing. Revenue growth growing. The higher, way higher. There's a big difference here. There's a big spike here. Difference. Bigger upside. 500, look, 70. I don't think this is right. 560 or 550. It's more like $450 to $500, guys. So overall, apps definitely the one to be looking at if you're gonna buy it. I am not a financial advisor. It's up to you if you're gonna buy the stock and sell it, but this would be a good entry point at this price, 312. So let's go to our dashboard. I believe it's more than that today. I mean, let's go our technicals tab. See what's going on. See, as you can see, this is our technicals tab. The support level is at 310. Okay. So, and then you have a green buy signal here. We have also another buy signal here, 2 green tabs, another one here. That's definitely a buy. So if you do buy on the stock, you have to plan on holding it till it hits. It's probably going to hit here. First resistance level, you can see the first red line here. And then it will go back here. And then probably it will go back to right here. This is where it crashed, guys. So it's probably going to bounce here, here, then here, and then here. So you can buy it now. This is a safe buying zone, but I'm not a financial advisor. You need to do your own diligence and search. So overall, this is where you can enter somewhere around here, this line.